I think it is a very big deal, 100% so. But it's not just about gold, too. I mean, it is silver as well. China is a good example. We've seen just in the last week in Shanghai, their vaults grew by almost 53,000 kilograms of silver in the last week. Their total holdings are now up to almost 1.75 million kilograms. So you have 10% year over year increase in China's silver imports. So it's not just gold, it's silver as well. And it's not just the US, it's not just Europe, it's China, it's India, it's Russia. There is a massive drive away from promises and into things that are tangible in your possession. And what I found very interesting about this regional trade cooperation and supply chain alignment, as they call it, is that China and Japan are two of the top foreign holders of U.S. treasuries. And they're showing a clear pivot away from the U.S. economic influence. When you see these countries start to join together, it's something that should certainly be noticed. And again, here in Europe, we can see they're very uneasy here.
You're watching Silver News Daily. Subscribe for more.
The global financial system is shaking at its core, and silver is about to erupt. Behind closed doors, banks are scrambling, nations are hoarding, and markets are spiraling into chaos. But while most eyes are glued to the crumbling stock indexes and the free-falling dollar, something far more explosive is brewing. Silver, often ignored, often suppressed, is gearing up for a breakout so fierce it could shatter every record we've ever seen. This isn't just another rally. This is the perfect storm. An economic supernova where runaway inflation, geopolitical warfare, and supply shocks collide to ignite a metal long overdue for revenge. China's moving in silence, buying up every ounce of silver it can get its hands on while choking off global exports of critical minerals. At the same time, Wall Street is trapped in a dangerous game of shorting silver they don't physically own. And when the margin calls come, the squeeze could be biblical. Some insiders are already whispering about $500 per ounce in the coming months. It sounds insane, until you realize just how close we are to total market breakdown. What happens when the dollar collapses? What happens when trust evaporates? Investors won't just want silver, they'll need it. So how did we get here? And why are the world's smartest investors quietly preparing for a silver tsunami while everyone else is asleep at the wheel? Stick with me, because this is the story no one's telling. And by the end, you'll understand exactly why silver might not just be a safe haven, it might be the last one left.
And not a lot. One of the things that I found interesting, I kind of detached for a few days, so I power read over the last 2 days. One of the things I found interesting was 2 days ago or 3 days ago, you had Japan, South Korea, and China held a trilateral meeting called Economic Dialogue. And it's the first one that they've had in over 5 years. And they are pledging joint responses to the U.S. tariffs. What I found very interesting about this regional trade cooperation and supply chain alignment, as they call it, is that China and Japan are two of the top foreign holders of U.S. treasuries. And they're showing a clear pivot away from the U.S. economic influence. When you see these countries start to join together, it's something that should certainly be noticed. And again, here in Europe, we can see they're very uneasy here. Their trust in the West is totally eroding. And one of the things that there was a long article that I read just the other day here in Europe, and is that you have nations not only racing to get precious metals, but also all critical minerals from copper to zinc to nickel. There's a drive to get tangible assets globally. And when you see Japan, China, and South Korea come together and say, hey, we're going to work together to sidestep U.S. sanctions and U.S. tariffs, that's not a good sign unless, look, you could look at it that way, or you could look at it like Bill Holter does. I had a long talk with him, and he's like, look, between the Doge cutting, the layoffs, which, the U.S. government their spending accounted for over 30% of GDP. You're laying off thousands of workers. You're putting on tariffs, which will slow down business. You're all of that money that's been in the system the last several years, which you could argue has been illusionary, certainly seems to be coming to an end. And what does that mean for the markets? Is that why the markets are getting crushed today? Do they see this coming? Are they trying to, look at what Percent says? This is not a MAGA problem, it's a MAG 7 problem. Are they trying to bring on a controlled demolition of the markets? Well, and bring rates way down because a recession is coming? Well, that's what Bill would say. There's a million different viewpoints that you can take on this right now, but the bottom line is that you could argue things are just starting to get interesting. Things are just starting to get concerning. So other than that, no. I mean, I guess the only other thing that I would say about today's move is that I really do believe that this was
are now locked in a full-scale trade war.
Another one of the Hail Marys to flush managed money, which was very long.
China dropped a
out of
retaliatory
their long
bombshell,
silver positions in
slapping a
particular.
crushing
We'll see what happens
34%
tomorrow.
tariff
I would
on all
guess we'll
US
see the
goods
price
slamming
start
the
to
door
move
on
up again.
key rare earth exports. It's not just a policy move, it's economic warfare. The result? Wall Street in freefall, tech giants bleeding billions, and global investors scrambling for cover. But beneath the surface of this financial carnage lies a far more telling signal. Panic is setting in, and silver is caught dead center in the storm. Markets hate uncertainty, and this trade war has delivered a tidal wave of it. Within hours of China's announcement, U.S. markets shed over $2.4 trillion in value. Apple and Nvidia, both heavily tied to Chinese supply chains, took major hits. The Nasdaq plummeted into bear territory. These aren't just routine corrections. This is a cascading breakdown in investor confidence. And what's worse, the pressure is mounting globally. Japan called it a national crisis. Canada's job market is buckling. And Europe? Completely split on how to respond, torn between diplomacy and retaliation. Meanwhile, the Federal Reserve is cornered. With inflation already out of control, more stimulus would fan the flames. But doing nothing risks deeper recession. It's a lose-lose situation. And in times like these, markets start searching desperately for stability. That's when hard assets surge. That's when metals rise. And right now, silver is being pulled in two directions. Brutally sold off in the rush for liquidity, but quietly accumulated behind the scenes by those who understand what's really coming. Because once the initial panic fades and the dust settles, the world's going to need a new financial anchor. And the smart money knows exactly where to look.
And the only other thing I'd like to say, when we talk about gold at all-time highs yesterday at above 3150, and here we are today with all this volatility at 3110 or so, yet there's eerie quiet in the market. There's no headlines. There's no retail euphoria. Quite to the contrary. This is not a bubble at all. This has been stealth accumulation. And the funny thing is, to your audience and to you and I, well, what do you mean stealth? Central banks are gobbling it up, right? And all the big money is standing for delivery. But take a step back from YouTube and try and find that. Watch Fox and, spending a few days in Rome last week, I was stuck with the only American-speaking channel was CNBC. I wanted to pull the hair out of my head, but I watched it for a while. And I mean, you wouldn't know that gold even had a heartbeat as it's continuing to rise and rise and rise and rise. And so it's very interesting when, people are wondering, is 3,100 the top? Some analysts calling it top. Well, you got banks right now talking about 4,500, and including some very large banks like Bank of America and Goldman Sachs. So, how are we near the end, or is it just beginning based upon the lack of retail involvement, the lack of no headlines on the media? This isn't a bubble at all. So yeah, I think this is a natural pullback. It's gone straight up. It needed to exhale a little bit. Certainly did, but yet you can see a market that was down $80 this morning has roared back 50. In fact, it was up positive at one point about an hour ago. So it's volatile still, but here we are, and not even down 1% in gold. after an $80 decline earlier in the morning. Crazy times, to say the least.
While the West scrambles to manage the chaos, China is playing a different game, one of silent, strategic accumulation. Beneath the headlines of tariff wars and tech blacklists, Beijing is quietly cornering the silver market. It's not just about precious metals, it's about control. China knows that in a world spiraling into recession, with fiat currencies on the verge of collapse, real assets become the ultimate power move. And silver, with its unique blend of monetary and industrial utility, is the crown jewel of this silent financial offensive. Just look at the moves they're making. Export restrictions on rare earths? That's just the beginning. Beijing has been restricting the outflow of critical materials while absorbing as much as possible through state-backed entities and private channels. Their demand isn't driven by retail speculation. It's strategic, long-term, and deeply geopolitical. Silver's role in solar panels, electronics, and advanced military tech makes it far more than just a hedge against inflation. It's a resource of national importance, and China's behavior reflects that. With zero reliance on central bank stockpiles and no historical overhang like gold, silver is being funneled into state industries and held tightly. And it's not just about supply, China's also weaponizing demand. By manipulating tariffs, supply chains, and currency valuations, they're ensuring that the West burns through its silver reserves while Beijing stockpiles quietly behind the curtain. In a financial system built on illusion, this is real strategy. And when the Western institutions finally wake up to a physical shortage, they'll find that China already owns the game. Because while Wall Street plays with paper promises, China is collecting the real thing, 1 ounce at a time.
Yeah, we don't really. I mean, there have been articles, Bloomberg in particular today, I guess it would be today or yesterday, I'm not sure based upon being in Europe, but I read an article that I read today on Bloomberg that, more or less said, well, now that Trump said gold would not be tariffed, as we have said a million times, is that they're not going to tariff gold and silver. That was a ruse. That you saw the price fall off, and now you're going to see the exchange for physical. All of this stuff is gonna revert, and metal's going to flow back to London. I don't believe that to be the case. Look, we've seen over 15 million ounces stand for delivery on COMEX this year, and it seems to be driven by some form of a whale. I mean, who the heck's got that kind of money? Who's got that kind of firepower? Question is it a foreign government? Who the hell is seeking physical delivery? And again, it's the rising distrust in the U.S. financial stability. I don't think this is going to end. At the same time, there was just an article coming up that says Germany, again, is now very, very concerned about keeping gold in U.S. vaults. They're concerned over the Western custodianship, and so. No, I don't think that we will see the metal flow back to Europe, and I don't know that we're really going to figure out what this is all about until we figure it out. There haven't been any clues really given other than we're supposed to believe it's all about tariffs, which I don't believe. That's what Bloomberg wants us to believe. I don't believe that it is. I think it's more along the lines of removing counterparty risk, and whether it be Germany removing the counterparty risk or the U.S. removing counterparty risk, reshoring, holding it in your hands. I think that's really what it's coming down to. It's about having it in your hands. It's the old saying: if you don't own it, if you don't hold it, you don't own it. Maybe that's really what it's all about. And no more paper trusts. I want it in my possession.
Well, it's reminiscent of Germany being one of the prominent countries that had asked for their gold back earlier, and were told that they were going to have to wait. Can you recap that for those who aren't aware of that story?
Yeah, well, they repatriated. They tried to get their gold back in 2013, and it took until 2017 before the gold was actually sent back from the U.S. vaults. But the bars that they had sent back had different serial numbers on them, and so the bars weren't the same ones that they sent.
Confidence in the U.S. dollar is unraveling at a terrifying pace. The very foundation of global finance, trust in the greenback, is starting to crack. And once that trust is broken, no amount of policy spin or interest rate manipulation can put it back together. Central banks around the world are watching the Federal Reserve fumble its response to inflation, recession risks, and now a rapidly escalating trade war. And as the dollar wobbles under the weight of trillion-dollar deficits and political dysfunction, a growing number of nations and investors are asking the same question: what comes next? This is where silver starts to shine. Because while gold has long been the go-to hedge against currency collapse, silver offers something even more explosive: monetary protection with an industrial kicker. And in times of dollar devaluation, silver doesn't just rise, it slingshots. Think back to the 1970s. Stagflation hit, the dollar sank, and silver exploded nearly tenfold. History is starting to rhyme, only this time the setup is even more extreme. U.S. debt has passed $35 trillion. Foreign buyers are dumping treasuries. Inflation remains sticky. And now, with China and other BRICS nations pushing for a new global trade currency backed by commodities, the dollar's role as the world's reserve currency is on.
Which caused a whole lot of concern that those bars they had done something with those bars, and took them 4 years to come up with bars to send back to Germany. What does that really say about custodianship? I mean, it's supposed to be the bars that were put in there, the bars that are returned. So I think it is a very big deal, 100% so. But it's not just about gold, too. I mean, it is silver as well. China is a good example. We've seen just in the last week in Shanghai, their vaults grew by almost 53,000 kilograms of silver in the last week. Their total holdings are now up to almost 1.75 million kilograms. So you have 10% year-over-year increase in China's silver imports. So it's not just gold, it's silver as well. And it's not just the U.S., it's not just Europe, it's China, it's India, it's Russia. There is a massive drive away from promises and into things that are tangible in your possession. And Germany is a good example of that. But if you look at, you can see this everywhere. I think that this is something that people should really try and understand. What Trump is doing here is eroding confidence. Now, I'm all for him and what he's trying to do, but he is eroding confidence on many levels by many of the players that will start to say, you know what, maybe we need to rethink whether it be the United States or anyone holding our assets, we'd like them in our own possession. And that's kind of what you're seeing, this weaponization of money through sanctions, through asset freezes, or any politicized financial tool like a tariff. These are backfiring as far as I'm concerned as trust is collapsing. So, you know, the question is, are these diplomatic acts or are these signs of desperation? I don't know, but certainly something to keep an eye on for sure.
Silver's story gets even more compelling when you zoom in on the supply side. And what you find is a market hanging by a thread. For 5 straight years, global silver production has failed to meet demand. That's not a dip. That's a structural deficit. And yet, prices haven't reflected that reality. Why? Because for years, silver has been manipulated, suppressed, and treated like a second-class metal. But that illusion is breaking fast, and the supply crunch is about to hit with full force. Mining output is declining, not just temporarily, but long-term. New silver discoveries are rare, development timelines are growing longer, and costs are rising across the board. At the same time, demand is surging. Industrial consumption is through the roof thanks to solar, electric vehicles, and technology. And then there's investment demand. Small investors, big institutions, and now entire nations waking up to silver's strategic value. It's a perfect storm, and we're already seeing signs of it in the leasing market, where lease rates have quietly crept up towards 6%. That's not a normal market. That's a stressed one. And here's the kicker. Unlike gold, there's no central bank backstop for silver. There are no vaults full of silver bars waiting to be dumped on the market when things get tight. When the physical shortage begins, there's nowhere to run. COMEX can print contracts, but they can't print metal. And the moment that disconnect becomes undeniable, when investors demand delivery and the system can't deliver, that's when the supply crunch turns into a price explosion. Because in a market this tight, even a small surge in demand can trigger an outsized move. And right now, the groundwork has already been laid.
Let's not forget about the dollar, which has lost 35% of its purchasing power against gold in less than a year. And so it's not just the volatility we see in silver, but the volatility in the dollar too. And that's the thing people need to remember, is that we're valuing everything against dollars, but gold's rise of 35% just since the beginning of the year would signal that the dollar has lost 35% of its value against gold in the last year. And now you have the Fed pricing in a 70% chance of rate cuts in June, and the yield on the 10-year falling. Again, you're looking at the potential of dollar weakness going even further and further and further. So, I mean, you make a very valid point, but I would also add to that this fiat system, as you mentioned, is beginning to show cracks. And it's this global confidence that's underpinning the dollar's dominance seems to be wavering a bit, especially with what Trump is doing with the tariffs and what the markets are saying. And when you see the Russell 2000, which is the broadest measure basically of the economy, all the small caps, the businesses getting hammered, I think it's time to buckle up a little bit. I'm not making a statement on where I think gold and silver are going, but I'm just simply saying that the markets are telling you right here and right now that they're concerned about what's going to happen the rest of the year.
Behind the scenes of the silver market lies a dangerous illusion, one built on paper promises, leverage, and blind confidence in institutions that may already be buckling. At the center of it all is the COMEX, the massive U.S. exchange where silver futures are traded. But here's the dirty secret. The overwhelming majority of these contracts are never settled with physical silver. They're just paper bets. And while the system works when confidence is high, it becomes a house of cards when investors start asking for the real thing. We've seen it before. In moments of crisis, the cracks appear. Premiums on physical silver surge, delivery times stretch, and suddenly there's a gap between the official price and what it actually costs to get a bar in your hands. That gap is growing. And now, with speculative positions near 5-year highs and lease rates spiking, the stage is set for a short squeeze of epic proportions. The specs, those hedge funds, and traders piling in for quick gains, are dancing on a knife's edge. If prices turn, margin calls will force liquidations. But if prices rise and physical demand spikes, the COMEX could face a delivery nightmare. That's a scenario no one wants to talk about. A failure to deliver wouldn't just be a technical hiccup. It would be a crisis of confidence in the entire system. And with silver inventories at the exchange already dwindling, it wouldn't take much to set off a chain reaction. Banks and institutions that have been shorting silver for years, profiting from artificially low prices, could be forced to cover those positions in a panic. And when they do, the move won't be gradual. It'll be vertical. Because in a market this manipulated, once the dam breaks, there's no putting the water back.
But let's not forget, in the case of the gold-silver ratio, that the market can stay irrational longer than we can all stay solvent. And that's really very true. Today is a good example. I mean, the market has been unbelievably volatile today. Gold was down $80 at one point, and about an hour ago it was actually up for the day, and now it's down about $27. So, when you talk about this whipsawing, yet only giving back less than 1% on gold isn't the case right now with silver, which is down $2 to right at $32 or just above. Certainly they and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX, and maybe it's to allow these commercial banks to cover at lower prices. I don't know, but certainly today was one heck of a volatile day, not just for precious metals. I mean, look at the markets themselves. The Russell 2000 index officially has entered bear market territory for the first time since 2022, and NASDAQ down almost 6%. And, the markets are getting clubbed. And then you have Secretary Besant saying, yeah, that the collapse of the market is not a MAGA problem, it's the Mag 7 problem. And we talked about last week on your show that the Mag 7, when you talk about the hedge funds having their lowest allocation to the Mag 7 in over 2 years, things are certainly starting to get very interesting, as they say, which of course is the Chinese curse. Where you live in interesting times. These are not for the faint of heart, for sure.
The calls are getting louder and bolder. Analysts, insiders, and even former skeptics are now floating a number once considered unthinkable: 500 silver. Just a year ago, that would have sounded like wild-eyed speculation. Today, it's a scenario backed by math, market mechanics, and a rapidly unfolding financial crisis. When the system begins to buckle, it's not the average investors who move first. It's the ones with deep connections and deeper pockets. And right now, they're not just buying, they're preparing. Take the unprecedented surge in physical demand. Dealers are struggling to keep inventory. Premiums are spiking, even as the spot price remains under pressure. That disconnect tells a story. The paper market may be pretending everything's fine, but the physical market is flashing red. It's not just retail buyers either. Whales are moving in, draining vaults, shifting out of cash and into hard assets. Why? Because they understand that once confidence collapses, the scramble for silver won't be orderly. It'll be chaos. And then there are the technicals. Silver has broken through major support levels, triggering forced selling. But technical analysts like James Hirchik are watching for the reversal. Because once silver reclaims those lost levels, the bounce back won't stop at $35 or $50. It could rip straight through. The gold to silver ratio, off the charts. Short interest, towering, and the pressure from both sides, industrial demand on one end, monetary panic on the other, means that any spark could ignite a run. So is $500 silver possible? Absolutely. In fact, in an environment like this, it might even be conservative, because when confidence fails and the system built on leverage, suppression, and denial starts to collapse, silver won't just rise, it'll explode. You said,
yeah, it's interesting to think that if you were fortunate enough to trip over a hole in ancient Rome or today in what used to be ancient Rome and find a gold piece, it would be as relevant and valuable today and as beautiful today as it was 3,000 years ago, not tarnished and not corroded, not destroyed. It's an overwhelming sense that I have had as I've walked around here. So I just wanted to kind of mention that because, you don't see that historical significance walking around southern Florida, but you sure do walking around Rome and here in Prague, soon to be in Barcelona.
if there's one signal flashing brighter than all the rest, it's the gold to silver ratio. And right now, it's screaming by. Historically, this ratio has acted like a warning bell, telling investors when silver is undervalued relative to gold. And today, that bell is ringing louder than it has in years. We're sitting near a ratio of 100 to 1, meaning it takes 100 ounces of silver to equal 1 ounce of gold. That's not just extreme, it's irrational. Especially when you consider that silver is only about 14 times more abundant than gold in the Earth's crust. The market has completely lost touch with reality. But here's where things get really interesting. Every time in history that the ratio has reached these extreme levels, silver has followed up with a monster rally. In 1980, the ratio collapsed from over 80 to below 20 in a matter of months, as silver rocketed from under $6 to nearly $50. In 1980, 2011, the same thing happened again. The pattern is undeniable. When the gold to silver ratio snaps back to historical norms, silver doesn't just catch up, it overperforms in explosive fashion. And what's even more telling is that gold has already begun its breakout. It's hitting new highs, buoyed by central bank demand and investor fear. Silver, meanwhile, is still lagging, artificially suppressed by paper contracts and liquidation pressure. But that gap can't last forever. At some point, investors realize the ratio is unsustainable, and when they start moving into silver en masse, it doesn't just rise. It slingshots. That's what this ratio is telling us right now. Silver is sitting on a coiled spring, and when it pops, it's going to leave gold in the dust.
Because, I spent a few days in Rome, and, walking through ruins that are 2,000 years old and walking through castles here in Prague. And, it's crazy that across thousands of years, as so many things have come and gone, civilizations and empires have collapsed and empires fell. But the one thing that remains constant, even here today, is gold. And I'm reminded of that as I walk through all of these historic places where gold has represented something significant to all of these civilizations, to all of these cultures. It's in today's world, which seems to be fractured on so many levels, its relevance is not just returning, it's accelerating. And I've kind of been overwhelmed with that feeling as I've walked around Europe. It's weird when the United States is celebrating its 250th birthday next year, July, and yet you walk around places here that are 2,000 years old, and it brings things into perspective. Yet everywhere you go, there are signs of gold and its significance. So I don't know, just kind of neat to say that, because I think the more things change, the more they stay the same.
Markets are in free fall, and fear is spreading faster than the headlines can keep up. With every trading session, margin calls are hammering portfolios, forcing investors to liquidate anything they can. Stocks, bonds, even precious metals. That's why silver, despite its long-term strength, has taken a short-term beating. But this is the part of the cycle most people misunderstand. These aren't signs of weakness. They're the final tremors before the ground splits open. Because when forced liquidations hit their limit and the dust begins to settle, silver doesn't just recover. It erupts. Right now, hedge funds are dumping paper silver to meet cash demands. But physical demand? It's surging. Buyers are taking delivery, not just trading futures. Supply chains are strained, refiners are backlogged, and bullion dealers are running dry. And the disconnect is widening. The spot price says one thing, but if you try to buy actual silver, you're paying a steep premium. That's not a fluke. That's a warning. And the panic isn't confined to retail. Institutional investors are caught in a vice. Many are overleveraged, holding paper assets that are rapidly losing value. They're being forced to sell good assets to cover bad positions. But what happens when the selling stops? What happens when there's nothing left to dump and the market turns? That's when silver comes back with a vengeance. Because while the rest of the market is drowning in paper losses, silver's fundamentals remain bulletproof. And the snapback from this liquidation wave will be violent. This is the slingshot moment, the point where downward pressure turns into explosive upside. And those who positioned early, who held through the storm, are the ones who will ride the rally when silver makes its historic return.
1,000%. You nailed it. That's what it is. And I think that's something that's not going to, that concern isn't going to mitigate anytime soon. I think it's only going to accelerate. And that's what we're seeing by everyone trying to.
Like maybe during his third term, you mean?
Yeah, exactly. Well, that's
As
just
people discussing. Speaking of unpredictability, yeah.
Yeah, well, look, I mean, I think what you're basically seeing is that sovereignty begins with no counterparty risk. And that's really what this all boils down to, is that you can think you have sovereignty, but if your positions are filled with counterparty risk, how sound is that sovereignty? So I think that's kind of what it's coming down to. And his actions, whether they be benefiting the American public or not, that's, I'll leave that up for debate. What I will say is that a good portion of the world believes that it's not. And so you're seeing, that's why I say, is this the act, or is the world viewing this as the act of desperation of a declining empire? I don't know. Are they? Kind of feels that way when you look at the pushback that you're seeing, especially here in Europe. They're very angry. And, this is just beginning. See, this is the first day that the tariffs were announced.
Everything we've covered, from China's silent accumulation to the looming collapse of paper markets, leads to one undeniable truth. Silver is standing at the edge of a historic eruption. While the world scrambles to contain a collapsing dollar, navigate geopolitical chaos, and survive market panic, silver is quietly preparing to flip the entire script, This isn't about hype or headlines. It's about math, mechanics, and momentum converging at once. And when the breakout begins, it won't be gradual. It'll be seismic. Silver's next move won't just reflect market conditions. It will redefine them. The $500 price target? It's not fantasy. It's the logical endpoint of a market that's been artificially suppressed, structurally short, and fundamentally misunderstood for decades. The forces now colliding, supply shortages, industrial demand, monetary fear, and geopolitical tension, have created the perfect launch pad. And when the short squeeze finally detonates, the aftermath will ripple through every corner of the global economy. The window to act is shrinking. Silver won't stay at these levels for long. When the breakout hits, the move will be fast, brutal, and largely inaccessible to latecomers. So if you've seen the signs, if you understand what's coming, don't wait for confirmation. Because by the time the headlines catch up, the opportunity will be gone. Make sure you're subscribed so you never miss the latest insights on Silver's breakout. And remember, this is not financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions.